Welcome to another edition of Business Redefined. We are delighted to have Robert Warrior, Associate Director at KPMG. We want to take stock of all the developments which have been taking place in the taxation environment. Minimum tax has been thrown out. There was a stay order on excise inflation adjustment on excise duty on petroleum products and a number of other things. KRA has been overshooting its targets. So Robert, welcome on set.
Thank you very much, Julians.
Robert, let's start with the performance. Full year FY 2020-21, KRA overshot its target by about 16 billion. They mobilized 1.652 trillion shillings. Q1 of the current financial year, 476 billion, again ahead of target by about 14 billion shillings. Quite impressive. And the first question is this: for all those of us, myself included, who have been recurrently saying every financial year that KRA is saddled with unrealistic revenue targets, have we been wrong?
Well, thank you very much for that question, Julians. I don't think we've been wrong. I think the current regime at Revenue Authority has really gone out. It's not an easy thing to exceed your budgets by about 14 billion in Q1. And in fact, if they carry on with that trend, we are likely to see Revenue Authority meeting its target of 1.87 trillion shillings, which is quite impressive. I think what's been happening is that there's been a serious push by Revenue Authority to get as many people paying taxes. That's number one. Number two, we've seen a reversal of the tax rebates that were there last year, which contributed to a bit of a challenge in meeting the tax targets. So I think that, coupled with the bouncing back of the economy, should place Revenue Authority on a good trend to meet its targets.
When I analyze the various tax heads, Payee, etc., Payee particularly confuses me, and I think there's a lot of noise there. And here is why. If you look at the full year 2020-21, it trailed a bit, I think for understandable reasons. But if you look at the Q1 performance for Payee, it actually overshot its target. We understand last year Payee was reduced from 30% to 25%. It was reinstated, and therefore you're not sure whether Q1 performance is an indication that pay as you earn is back on course, or actually is just coming off a low base, and therefore we expect that it would be doing well.
Yeah, I think you're right. First of all, it's coming off a low base because, like you correctly said, it underperformed last year. And then now the economy is opening up, so we are seeing a bit more people getting back into employment. Those people who had salary cuts have had those ones reinstated, and generally the economy is just growing. So I think definitely PAYE is going to be performing a lot better this year, in my view. Add that to the fact that the tax bands were consolidated. So Revenue Authority is collecting that little more from the normal tax person or the normal taxpayer. So in my view, I think it's coming off a lower base, number one. The economy is opening up, and then considering the impact of those revised tax bans, I think that should put PAYE on a good road to recovery.
For the full year 2020-21 and now Q1 for the current financial year, Customs has actually been doing the heavy lifting in terms of performance. And why I found that intriguing was, we know like last year for a good chunk, there was a lot of disruption in the supply chains and the trade flows. What's exactly happening at Customs?
You're right. Number one, the supply chain is coming back online. And so we are seeing a lot more imports coming through. Uganda is, the throughput through to Uganda, to Rwanda is increasing. And I think that in itself is contributing to a significant ramp up in terms of the customs revenue. That's number one. I think number two, Revenue Authority has really tightened the whole process of importation, so that today, for example, they are scanning imports, practically all imports into the country. So it becomes a bit difficult for anybody to circumvent the import process and the payment of the taxes. And the third thing that I think is contributing to increased customs revenue is the post-clearance audits. So we've seen a lot of audits by Revenue Authority. After you clear your goods, they come and confirm whether you paid the correct taxes, did you declare the correct tariff codes, and this kind of things. So there's been a lot of activity around the post-clearance audits, which again is contributing to the customs revenue.
Early last month, when the Treasury Cabinet Secretary Kuritani was launching the Taxpayers Month, he mentioned something very interesting regarding digital services tax, which took effect in January this year. Thus far, he said there are about 58 non-resident companies which have come forward, and the tax income realized from that is about 47.5 million shillings, which I thought was a very small figure. I don't know what you made of this.
That was the number then. Actually, the latest statistics that we have from Revenue Authority suggest that we've collected about £1 billion in digital services tax. And this billion shillings is roughly divided equally into what was collected from the domestic segment. Remember, there was domestic digital services tax on domestic transactions, and then what you'd call external transactions. So it was 50-50, about £500 million each. Now, with the change in Finance Act 2021 that excluded local transactions from digital services tax, we can see that that segment of revenue is expected to continue and possibly realize, about £1 billion shillings in the course of this financial year. So I think it was a bet by Revenue Authority that they were going to collect significant amounts of money from that. I think it's paying off currently. But we do appreciate that there is an international debate about Kenya and Nigeria and I think Pakistan and Singapore, who have not signed up to the Global Forum proposal about digital services tax. So that's a debate that's going on. But it looks like Revenue Authority, at least statistically, is saying we think that going the unilateral way of having our own DST will work.
I know you don't sit at KRA, you don't speak for KRA, but let me ask this question. When you look at the DST and the numbers you've just given, from a yield standpoint, compared to whatever cost the government has incurred in terms of the rollout, do you think DST is punching within its weight?
Well, you're right. I don't sit within the Revenue Authority, and it's difficult to answer that one. But I think for government and for Revenue Authority, the way to look at it, or the way they are looking at it, is this. Before 2021, we didn't have this 1 billion shillings that we've collected in terms of revenue. So it stands to reason that if we can increase our tax collection from these transactions, then why not? And also, don't forget that as a country, we've gone into the digital space significantly. You know, you talk about electronic books, you talk about learning, e-learning, you talk about Netflix and just the trade on digital platforms. I think government is still looking at that as a significant source of revenue.
About a month ago, I interviewed the IMF mission chief to Kenya. And that was before the High Court threw minimum tax out as being unconstitutional. And she did mention that Treasury committed that in the event that minimum tax could not go on, it would find compensatory measures. So the first question is, what options really are on the table?
Number one, I should say that because this is a matter that is before the Court of Appeal, we really can't comment on that. However, from the statistics, we know that government was expecting to collect about 23 or so billion shillings from minimum tax. Now, in terms of compensatory measures, I think the Finance Act 2022 will be a very interesting one to watch, because this is where we expect, and remember it's coming in, it's going to come around March 2022 because of the elections. So I think this is going to be the avenue that government will use to sort of plug in those holes for the remainder of the financial year, 2022-2023. So I think we are likely to see additional taxes coming up, I think, because where exactly is this going to come from? How are you going to plug this hole? Number two, you had the CS talking about expanding the tax base. You know, they're talking about 2 million additional taxpayers from the current number we have of about 6.9 million taxpayers. So that, in my view, is where they are going to plug the hole. I don't believe that there are too many new taxes that can come up, because what else? Kenyans are already taxed, unless you're talking about moving the VAT rate to 17%, for example, or 18% to comply with or to be aligned with the region. But I don't know whether there is any further headroom to tax Kenyans above that. We've seen from an excess duty perspective, we're taxing almost everything.
Speaking about value-added tax, look at the performance we've seen full year FY 2021 and Q1. What's your assessment? And why that is of importance to us is because I remember in the COVID year in 2020, a lot of the discussion was demand will be subdued, consumption will be suppressed, VAT will not perform as expected. When you look at the numbers, what did you make of it?
Well, I think that especially with the economy opening up and the demand picking up again, and you can take the example of, for example, bars. They are now selling throughout the night. You can sell throughout the night, which means that there's a lot more demand for the product, which is accessible and subject to VAT. So that, together with the fact that there's a little bit more money in taxpayers or in citizens' pockets as a result of the employment coming back online. I think that will drive the demand and therefore the consumption taxes. And by the way, countries globally are moving to consumption taxes. And this is the reason why I'm saying that perhaps really this is where the headroom is, and that's the reason why you see excess duties also, being imposed on practically everything now, including, eggs and stuff like that.
Speaking about the issue of widening the tax base, really sometimes I wonder what more can be done. We've had this conversation before. We tried presumptive tax. Didn't seem to be quite successful. We tried turnover tax. There was an argument that minimum tax was also geared towards that avenue of widening the net. When you look ahead, what really more do you think is potentially going to be introduced here?
Well, I think one of the things that is going to happen, and one of the things that government is working on, is what they're calling the tax invoice management system, which, if I was to explain it simply, is a system that permits KRA to have sight of all transactions of VAT registered persons. So in other words, if I come to Julian's and I buy something, say, worth 1,000 shillings, and you charge me VAT of 160, immediately you give me my invoice, then Revenue Authority will know that that transaction has occurred and can trace that transaction to Robert and so many other people. So the idea here is to get as many of these people into the tax net, and we identify them, or at least Revenue Authority identifies these people. And then you can be able to work backwards and say, now I know there's somebody who exists that is called Robert. How has he been paying his taxes? What is his tax profile? Can I look at his lifestyle? Does it match? And that I think is a key cog in expanding the tax base. That's number one. Number two, we've got, if you look at the Finance Act 2021, there was a proposal around common reporting standards. Yeah? And essentially what this is going to do is that it's going to permit, it's going to obligate certain sectors of the economy, for example, financial institutions, to report certain data points to Revenue Authority. And once the Revenue Authority has got that data, they can then, using their systems, look and see, are taxpayers being completely honest in terms of disclosing their income. And the point is here, the minute you've got data and you can analyze that data, data analytics becomes very important. If you can analyze that data, then you can identify those people who are not paying their fair share of taxes. And I think that is the route that Revenue Authority and government is taking in terms of taxpayer expansion.
The Voluntary Tax Disclosure Program. The President, while giving the taxpayers awards, did give some update. 393 taxpayers have come forward. The realizable revenue from that is about 2 billion shillings. What's your assessment of that?
Well, I think this is those were the initial stages, and I think that those statistics were possibly around 30th of September. So, based on past experience, and if we were to look at the past amnesties that have been taken up in this country, and especially the one to refer to is the 2003-2004 amnesty, which was highly successful. If we were to look at that, and when taxpayers actually filed for that amnesty, I expect that next month, December 2021, will be a really busy month for Revenue Authority, for the simple reason that a lot of taxpayers
are trying to get to, yes,
to get to that deadline of 31 December, so that you can then get a waiver of 100% of the penalties and interest. So I think this is something that is useful to track, but I think there will be a significant contribution from that revenue stream to government coffers. So it started off slowly, but I think it will pick up next month.
Okay. And in terms of the process by itself, I don't know whether you have any experience in terms of how it is being executed from an end-to-end basis.
What's happening is that as a taxpayer, says Julian, so you say, I've not paid my taxes, and you review your affairs, and once you discover that I've not paid, say, 100,000 shillings, you then write to the commissioner and say, I'd like to disclose these 100,000 shillings. And then the commissioner will ask you for supporting data. Let me see your computations. How did you arrive at this? What periods are covered? Once they look at that, it goes through some internal review processes, including just confirming that or verifying at a high level that you are fully disclosing the income that is due to be disclosed. Once that is disclosed, as a taxpayer, you then go onto iTax, which is a phenomenal tool, by the way. You go to iTax and you disclose that data. And once you disclose it, you're then able to pay. So that's a process. And I think the slight challenge right now is that between making the disclosure and getting the approval, that process of verification is taking a bit of time. But I suspect that because they will need to accommodate very many taxpayers in December, I think that process will be shortened as we go along.
Inflation adjustment of excise duty has been a subject of discussion lately. We've seen a notice dated 2nd of November. First, what's the import of that in terms of the cost of the goods itemized there, whether it's drinking water, sodas, etc.?
So you see, excise duty is really a consumption tax, which means that it's borne by the final consumer of the product. So if you go and buy a bottle of water, for example, we expect that incremental excise duty will be passed on to you as a consumer. So the direct impact is that it makes this product a little bit more expensive, and we expect that to manifest in excise duty. The other thing to note is that it will have a knock-on effect on VAT, because you first of all charge excise duty and then you charge VAT. So we expect that because the base for VAT has now increased, there will be an incremental yield for VAT purposes. So that really is the direct impact of this legal notice.
Okay. And just give us a sense in terms of, now that we've seen the legal notice, what are the next steps for it to come into effect?
So under the Excise Duty Act, the Commissioner General is permitted to gazette these adjustments they're called inflation adjustments under Section 10 of the Excise Duty Act. Now, once he or she issues that legal notice, within 7 days, he's required to transmit it to the National Assembly. And the National Assembly is then, within 28 days, required to debate it, within 28 sitting days, to debate it and either approve or reject it. So we expect that in the next month or so, this should receive approval of the National Assembly. However, it doesn't mean that the legal notice is not in force. It just actually the Act says that if it's rejected, then it ceases having effect immediately, which suggests that currently it is in force, and it's permitted to be in force for at least the next 34 or so days, which is 28 plus 7.
There has been a report tabled in the National Assembly by the Finance and Planning Committee regarding the issue of taxation of petroleum products. One of the proposals there is to change the provision that there will be an annual inflation adjustment of excise to make it once every 2 years. I read that proposal and I was wondering, what's the significance of 2 years? What's the import of that really?
So in my view, I think the key reason why that is happening is to give a sense of stability. And you know what, we've always been talking about the national tax policy and a stable fiscal environment, especially for investors. So if I know that this is the excise duty rate and it will only change after 2 years, then at least I can plan my affairs. And I think really that is the key driver of this. The other thing is if we don't change these excise duty rates annually, then it becomes a lot easier on the consumer, because it just means that if I get the adjustment this year, then I'll only get it in 2023. So I know that that'll, even for manufacturers, especially and even the agricultural sector, which uses a lot of diesel, for example, it just means that there's a bit more stability and predictability in the tax system. I think really that's the key issue.
And still on that report by the Finance and Planning Committee, there is the proposal, a significant one I should say, of reducing the VAT on petroleum products from the present 8% to 4% and reducing it on LPG from 16% to 8%. Do you see this proposal as being feasible, especially within the context of the fiscal environment and the IMF conditions and the revenue targets that come with the conditions?
Let's put it this way. I don't envy Ukuri Yatani right now, because it's a very difficult position to be in. On the one hand, citizens are saying life is becoming unbearable, the cost of living is going through the roof, and therefore, because fuel impacts the cost of living, especially from a transport perspective, we want this reduced, and that's really the push. If you look at that report, and even the report by the letter by the Speaker to the National Assembly, we're saying we want this reviewed, and so that we can address the cost of living, and that's the reason why that proposal came through. However, KRA has already factored in those numbers in their targets, and earlier on we were talking about running ahead of budget. With those ones coming in, certainly there'll be an impact in terms of the revenues that they collect. That's number one. Number two, we need to consider the IMF conditions. If you remember when the VAT on fuel came in, initially the proposal was 16%, but then the parliamentarians said, no, we don't want anything, and the compromise position was 8%. So I actually foresee another debate between the executive and parliament on the one hand, and IMF on the other, saying, you know, you need fiscal consolidation. You need to raise significant revenues to finance your operations as a country. So is it feasible? If fiscally, I think it's going to be a tough one for the CS. It's not an easy one for the CS to balance those interests.
Robert, in terms of the trade-off you've just pointed out, some have argued that maybe a viable proposition would be that, okay, fine, let's adopt these proposals of the reduction on the specific products, but then harmonize the VAT rate for all the other products to the regional level of 18%.
Well, that could also be a feasible option for government, and I suppose somebody needs to run those numbers to just see, do we sufficiently plug in the hole that would be left from reduction of these products? That's number one. Number two, I think if you look at even Rwanda, what Rwanda is doing from an emissions perspective, they're encouraging electric vehicles. And I think even in Kenya, we've seen quite a number of electric vehicles and charging points. So I think at some point we have to ask, will the consumption be sustained in the long run such that the 8% or the 4% VAT on fuel will contribute significant revenues to the exchequer. I think those are some of the things that we need to think about even as we are looking at regional harmonization. But I should also say that as a result of having a lower VAT rate in Kenya from a fiscal perspective, it makes Kenya a bit more attractive for an investor or even from a service sector perspective.
Let's stay with that report. Another proposal inside there is supplier margins should be squeezed from the present 12 shillings to 9 shillings. Many of us consumers would actually celebrate around this. We had a chat earlier, you expressed your misgivings as to the knock-on effect this would have in terms of the revenue outlook for entities like KRA. Let's shed some light on this.
The point here is this, you know, we've got to look at the full impact of the proposal. So as a consumer, I'm very happy that the margins have been reduced, because that simply means that the pump price is slightly lower for me as a consumer, right? And that's very good. Now, from a revenue authority perspective, and again, I don't hold their brief, but from a revenue authority perspective, you've got to look at it from a corporation tax perspective yield. It means that you'll sell the same volume of liters, but with a lower margin, which means a lower corporation tax yield for revenue authority. And those are some of the things that I think, you know, policymakers will need to look at. And this is one of the reasons why we say that we are eagerly awaiting the national tax policy, so that we can understand what is the policy directive and what are the policy underpinnings around these proposals. But to your question, lower margins, lower profits, lower corporation tax.
Speaking about the tax policy, Robert, we haven't seen any outputs by way of even a draft document coming from the National Treasury. But many times I've been asked, we've spoken about the national tax policy for such a long time. But if you are asked to point out 3 or so things which you think should be priority focus in this national tax policy, what would they be?
Number one, we understand from National Treasury, at least, that that process is now complete. The stakeholder engagement within the National Treasury and Revenue Authority, that is done. And we expect shortly that will be released to the public for participation, because, you know, the public needs to give in their proposals around that. But to your point around what are some of the things that need to be considered, I think we need to figure out, one, what are the sectors that we want to support as a country? We are talking about manufacturing contributing 15% of GDP. I think right now we are contributing about 7%. Yeah. So we want to contribute 15%. So what are some of the policies that we need to adopt as a country to support that vision? And number two, what are the revenue objectives of the country? What do we need to raise as a country, and therefore how should we go about it? And this is to answer the question, what should be taxed and what should not be taxed? What do you want to tax? And then 3, consistency and predictability. You see, the idea here is, let me give you an example of the electricity rebate. Introduced in 2018, removed in 2019. What they are looking for is predictability of the system, so that we know if we do this proposal, we put in this proposal, for the next 3, 4, 5 years, it's going to remain, and therefore there's a stable fiscal regime which businesses can work with.
All right, and that point by Robert Orero takes us to the close of our conversation, where we have been looking at the taxation environment in light of the latest developments, some updates given on the voluntary tax disclosure program, updates given on as far as the digital services tax is concerned, and we shall continue to highlight issues emerging in the taxation environment.